Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. All eyes will be on the US tech industry sell-off that gathered pace last week, delivering collateral damage to cryptos and a very volatile ride for precious metals. But first, this coming week will feature the delayed release of the US non-farm payrolls report on Thursday, and markets expected a gain of 70,000. And their CPI report on Saturday, where markets expect 2.5%. Deviation from these expected levels will likely have financial market implications. And Australia is set for a busy data week, with the releases including household spending, consumer and business confidence, building permits, home loans, and consumer inflation expectations. In New Zealand, the key data this week is for the fourth quarter 2025 ready-mix concrete and immigration updates, plus first quarter 2025 inflation expectations data. China will release its CPI and PPI data on Wednesday, expect 0.4% for CPI, as well as January new loan data this week. In China over the weekend, their foreign exchange reserves got a boost from the weak US dollar in January, which helped lift these by $41 billion from December to $3.4 trillion US dollars, and the highest in more than a decade. That is up from $3.2 trillion in January 2025. They also added to their gold holdings, adding 40,000 ounces in the month to 74.19 million ounces. That is up $1.8 trillion in a year. Also over the weekend, US economic data looked shaky. Initial US jobless claims rose by 22,000 from the previous week to 252,000 in the last week of January, sharply above market expectations of 212,000. There are now 2.215 million people on these benefits, up 78,000 from a week ago, but that's lower than a year ago levels, even if it is very much higher than 2 years ago. And US job openings fell by 386,000 to 6.5 million in December, the lowest level since September 2020, and well below market expectations of 7.2 million. Job layoffs in January came in at 108,500, the highest level for a January since 2009. And the University of Michigan's Consumer Sentiment Index rose marginally in February from its record low levels, and it was a third consecutive monthly increase. Analysts had expected to dip again. Despite the improvement, sentiment remained roughly 20% below January a year ago. The gains were driven largely by consumers with significant stock holdings, while sentiment among households without significant equity exposure stagnated at depressed levels. Year-ahead inflation expectations fell sharply to 3.5% from 4% in January, the lowest level since January 2025, while longer-term inflation expectations edged up for a second month to 3.4% from 3.3%. And the jobless rate in Canada fell to 6.5% in January from 6.8% in the previous month, undershooting market expectations of 6.8%. But this improvement was only due to fewer people looking for work. Their labour force contracted by 94,000 people, pushing the participation rate down to 65%. They lost 25,000 jobs in the month, interrupting a recent run of gains. But this was driven by a 70,000 fall in part-time jobs, whereas full-time positions rose 45,000. Meanwhile, Canadian retail sales data in both November and December came in quite positive. And their January Ivy PMI remained expansionary, a surprise because it was expected to shift back into contraction. And Japan has been voting in their snap national election. It was essentially a referendum about Sanae Takaichi, a die-hard conservative in the Shinzo Abe mould. She has won convincingly with a rare single-party majority. Actually, it's better than that, a rare two-thirds supermajority. And there was an election in Thailand as well, one where the ruling conservative royalist military party won, with 45% of the seats decided, plus the proportional representation seats. At the end of last week, around the world, there were a series of central bank policy updates. The Reserve Bank of India kept its key policy rate at 5.25% during its February meeting, after cutting it by 25 basis points at the prior December meeting. This was what was expected. In the EU, the ECB left its policy rates unchanged too in its first policy meeting of 2026 on the basis that inflation is stable and within its policy range. It is in the good place the central bank wants to see. And the Bank of England left its rate unchanged too at 3.75%, but that was a close-run thing with a 5-4 vote. German factory orders surged 7.8% in December from November, defying market expectations for a 2.2% drop and accelerating from November's marginally revised 5.7% gain. It is up more than 13% from a year ago. It marked the fourth straight monthly increase and the strongest since December 2023. Australia recorded a merchandise trade surplus of $6.7 billion in December, down 23% from the same month in 2024, taking the full 2025 surplus to $45 billion, which in turn was 33% lower than all of 2024. Exports were $523 billion for the year, up only 1%. And that gain was only possible because gold exports rose 66% to $61 billion for the full year. Rural exports rose 13.7% to $77 billion in 2025. Other mineral export receipts tanked. The US Treasury 10-year yield is now just on 4.21%, unchanged from Saturday. And the price of gold will start today, very little change from Saturday, at $4,966 an ounce. Silver is also little changed at $78 an ounce. In China, gold sales to investors topped those for jewellery for the first time in 25 years. And American oil prices are down about 50 cents, at just on $63.50 a barrel, while the international Brent price is now just on $68 a barrel. A week ago, these prices were similar. And the Kiwi dollar is now down 10 basis points against the US dollar from Saturday, now just under 60.2 US cents. Against the Aussie, we're little changed at 85.8 Australian cents. Against the euro, we're down 10 basis points to 50.9 euro cents. That all means our trade-weighted index starts today at just under 63.8 and down 10 basis points from Saturday. And the Bitcoin price starts today at $70,693 and up 1.1% from Saturday, but it's still down 10% from this time last week. Volatility over the past 24 hours has been modest, however, at just on plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.